Hello, hi. Yeah, today, exciting day. This is probably the second Fed meeting that's going to be announced at around 2 a.m. US Eastern Time. At 2 p.m. So, all this speculation of whether it's 0.25 basis rate height, zero point 0.5, or even the Paul Volcker style 0.75, 75 basis points, So, of course, the whole thing is the whole objective of the Fed is to balance um, demand, and also to uh, have price stability. Of course, they're not here to crash demand, i.e., to force a recession like the Paul Volcker period when there's like those 10% kind of thing. Um, yeah, so I think they have always wanted to have a 2% recession. Of course, now, inflation is about 7% and of course, the Ukraine-Russian war also has helped without the need for Fed to intervene, and already been some fear in the market to consume things or to go extravagant kind of lifestyle to spend on things, right? So yeah, so I believe that yeah, maybe at the most is the Fed would do they call it the front load, 0.5 first, and then after that go slower, or they can just do 0.25 a few times to hit that 2%. I think the 2% mark is pretty clear. So of course the question is, if you kind of like crush demand, if Fed were to crush demand by increasing the rates, right? um, by so I feel that this path is quite unlikely. Of course, it's a very delicate balance for the Fed. So let's see. I feel that at the end of the day, I think we are just this Muhammad L. Iran from Cambridge. He did mention we are just too obsessed with these Fed rate hikes and how we react in the market. At the end of the day, we just want to make sure that there's no credit crunch, like default loans and all that, and there's a continuous demand and there's no unemployment. Number two, and number three is there is continuous demand, like the Q1, Q2, Q3 may be a bit flatter. They may be able to sell less things but at higher price, and they still hit the required revenue. Things like that I think are still all right. So, and just now I did mention that we are already at the middle of recession. We had first quarter 1.4% down. So I think we are not heading towards recession. We are already in it. And the question is, and I think you can look at my past videos, not all recessions will result in market crash. It's always like a 50-50 thing. Yeah. So another thing thing I wanted to share with you is about the FANG stocks. I think there's going to be FANG stocks may not be FANG anymore. I think there's been a couple of new names coming out. Matang, consists of Microsoft, Nvidia, Tesla, and Google and all that, and they have excluded Netflix and Facebook, as the future growth of companies that have growth of at least 10% per annum onwards. Basically, they are looking at Netflix and Facebook have kind of like their S curve. As I know, they have towards the end, they are like a matured company. They are slowly turning to become like a value stocks, but it's very subjective. Anyway, Amazon also did mention that they will have a 5% yearly growth, or next quarter growth. So yeah, so maybe it's good time to review your FANG stocks, the cash like positions that you have, to see which company that you think that businesses will be at the beginning of the S curve trajectory, or the middle, not towards the end. So yeah, I just wanted to share with you about this again, about the economy shrinking the first 3 months. Yeah, we are in it already. So, and just that the Q1 profit reports by some companies has been still quite good. So, but definitely consumer demand constitute around 70% of all the market demands. So, this actually is a good reason for Fed to not to be so hawkish in increasing or front loading the interest rate so much at so quickly, um, because I still believe that some inflations are transitory, and I think from a political will side, in terms of creating more supply in the oil industry, will reduce the gas price and all that as well. So yeah, then I just wanted to share with you about Apple. I think I was quite bullish about Apple in my last video. You know, Apple actually constitute, they have hardware, they earn a lot of money from hardware, iPad, MacBook, and iPhone and all that. And of course, they have this 30% fees that they earn from the App Store as well, which is coming up quite well. I think the last quarter they earned around 15 billion from this particular app fees alone, from downloadable fees. I'm not sure whether they will go down in their fees, or not, or create allow those app developer to directly collect money from consumers. So let's see. If it is, then maybe the quarterly reports will of Apple may go down a little bit. But if they were to have the mass market pool, then there'll be more people using it, and even if 20%, they may still be able to hit 15 billion or 20 billion, which is around, I think, about 20% of the revenue. So I think take note of this very important point as well on Apple. And you can see Apple Car is coming as well, something quite interesting. So I think this is probably a very safe company that you can invest into, that has still quite a significant growth and in a growth trajectory. And Apple Pay as well, fintech, you can they have a role in that as well, for transactional fees and all that. So yeah, yeah, thank you very much. I think I've hit 7 minutes. Try to keep everything within 5 minutes. And please like the video and subscribe to the channel. Thank you very much.